Good day, good evening, good morning, and good good time for everybody that joins us today for our virtual meeting on data privacy for digital financial services. It's a meeting that is intended for our members in Africa region, and we are very welcome everybody that joined to the call today. My name is Arif Nasibov. I'm the policy manager in the global partnership teams of AFI, and I'm pleased to be host of here today. Before we start, let me give you some kind of introduction about what's the agenda for today's event. Can we go to the next slide? Yeah, today we'll have some kind of welcome remarks and context setting from Giyas Mohammad, Senior Policy Manager of AFI. He's leading one of our biggest working group. It's on digital financial services. After this short introduction and context setting, we'll have a moderated discussion between esteemed panelists, moderated by Giyas. And after the discussion, to which we devote around 90 minutes, we will have post-event evaluation that will take just 5 minutes of your time. So we'll understand how the event went well, or do we need anything to change going forward. And after the evaluation, it will be summary that will be made by Giyas. So he will summarize the discussion points, the main discussion points, and the main lessons learned from the moderated discussions that we'll have previously. Can you go to the next slide, please? Okay. Here are some kind of housekeeping rules that will help us to have a good experience of our moderated discussion today, the event, and let me give you some reminders. I think all of us know all these rules altogether, but just some kind of reminders that will help you to have a better experience from today's discussion on data privacy for digital financial services. The first, please kindly mute your audio. There is a respective button that actually will allow you to mute, and it help to concentrate on what was discussed at the panel. Please also switch off your video unless you are speaking, and you can pose your questions or ideas or remarks that you have in the chat box that is available for you at any time. Please be kindly know that because we moderate the discussion, we will ask the questions that moderator asked the questions that he prepared beforehand, but we will at some points of time we will check the chat box and bring the questions that are coming from the ground to the panelists, so it will be more engaging and driven by the members. And please, the discussion will be in English. If you need French translation, please use the translation button, and it will give you translation to the French. Can we go to the next slide? Yeah, and please let me introduce our esteemed moderator for this event, Ghiazuddin Mohammad. As I said before, he is a senior policy manager and lead of AFI working group on digital financial services. Welcome, Giyas. And let me welcome to the stage also our panelists for today's event. Yes, Yukiko Lorenzo from MasterCard. He is leading. He's senior. She's senior managing counsel policy and data protection in MasterCard, and she leads European policy team and is responsible on all things related to data. I'm also honored to invite to the stage Miss Patricia Adusei-Poku, the executive director of Ghana Data Protection Commission. She is a seasonal privacy practitioner. In addition to her role as an executive director of the Data Protection Commission, she also is co-chair of the Common Thread Network of Commonwealth Data Protection Commissioner and the vice president of the African Network of Data Protection Authorities. I was also honored to invite Mr. Awolani Rahulani. He is a senior fintech specialist in the fintech department of the Financial Sector Conduct Authority of South Africa. He is one of the authors of recently published report on non-traditional data research. I'm also honored to invite Mr. Gerard Nsambiana, Director of Market Conduct Supervision at National Bank of Rwanda. He is in charge of market conduct and financial consumer protection. He also has vast experience in financial inclusion, financial education, and financial stability matters at the National Bank of Rwanda. Mr. Elgin Koch is a data protection officer of TUNS. It's one of the companies that enables remittances across 100 countries in the world. Before he spent 7 years in Data Protection Commission of Singapore. Ms. Rose Grady, an international consultant that has more than 40 years in international finance, and she recently helped us to come up with a guideline note on data privacy for digital financial services. And Ms. Phyllis Kamau. She is Director for Government Engagement in Visa in East Africa. She has more than 13 years in government engagement across Eastern Africa countries and worked before with Safaricom and now works in Visa. Yeah, thank you, esteemed panelists, that you are joining for us today. So I give the stage to our moderator and the panelists to start the discussion. Over to you, Gias.
Thank you. Thank you so much, Arif. Good morning to colleagues and participants joining in from Africa, Europe, and the Arab region, and good evening to colleagues joining from Malaysia. Welcome to this webinar on data privacy for digital financial services. Over the next 90 minutes, we will discuss all things privacy within the context of digital financial inclusion. With our distinguished and truly diverse panel, including regulators, private sector players, and international experts. Before we get into the discussion, let me provide some context. In 2019, members of the AFI's DFS working group identified data privacy as a priority topic. We formed a subgroup. About 17 countries are part of this subgroup, and over a period of 1 year, we carried out studies on available regulatory frameworks on data privacy, linkages to financial inclusion, the evolution of fintech and its implication on data privacy, so on and so forth. Of course, the topic itself is relatively new. We wanted external expertise also to come in and support us with this analysis. This is where one of the panelists, Ross Grady, came in and supported us with the work on data privacy for digital financial services. So earlier this year, in February 2021, we published the guideline note on data privacy for digital financial services. We will share the link to the guideline note in due course. So the discussions today, we will surely touch upon the main points that are covered in the guideline note on data privacy for digital financial services. Let me quickly, in a minute, take you through the key pillars of the guideline note. If we can move to the next slide. Yeah. As I said, the framework, the data privacy for digital financial services framework looks at 6 key pillars. First is from a regulatory perspective, is there a policy regulatory framework in place? The need to have one in place is something that we talk about in the first pillar. Second pillar talks about the data controller and processor obligations. Again, moving away from the technical jargons, data controller and processors are the ones who collect consumers' data, process them, and offer products and services to the consumers. Data subject rights, again, a technical jargon there. Data subjects are basically consumers whose data is harvested or used by the financial service providers to offer products and services. The third pillar talks about the rights of consumers, basically. Fourth pillar talks about consumer awareness and recourse when it comes to data privacy related issues. Fifth pillar talks about regulators' ability and the requirements for supervision and enforcement on data privacy related aspects. And the final issue, which is very pertinent, especially given the current ongoing global crisis, is on leveraging data in the event of a global and national emergency, and what are the key aspects that we need to keep in mind um, as we address the crisis and as we depend on data to reach out to the affected populations at the shortest available time. So these are the key six key pillars. We'll share the guideline note in due course, but yeah, as I said, many of the discussions we'll have today will touch upon these pillars in detail. So with this context, let me just take you through quickly on the structure of this discussion. So this over the next 90 minutes, we'll break the discussion into three key parts. The first part, we'll talk about the existing status of how data is being used to deliver financial services and what are the benefits and risks related to that. The second part, we will focus on policy and regulatory interventions to address risks of data privacy for consumers, actually. This is going to be like the key chunk of our discussion for today. And the third key component will be on what are the private sector partners who are part of this panel, and generally, what are the private sector players doing in order to ensure data privacy, and how can private sector players and the public stakeholders work together in addressing data privacy related issues. So these three parts will be the key focus for the discussion today. And as we do that, I request you, dear participants, to actively participate. Please ask questions, share your thoughts, experiences to enrich the deliberations, dear participants. So with that thought, let me shoot my first question to Mr. Avelani, Rahulani from the Financial Sector Conduct Authority of South Africa. The FSCA has come up with an excellent report on the use of non-traditional data for delivery of financial services. And the report and the survey carried out as part of the report clearly talks about the benefits and risks of usage of data by the fintechs. Maybe Mr. Avelani, in the next 2 to 3 minutes, if you can quickly take us through the benefits and risks that you actually saw in your survey and analysis in South Africa. Over to you, Mr. Avelani, please. Thank you.
Thank you very much, Ali, and good afternoon, good morning, and good evening to everyone. Sure, Ali, yes, we did a study on the impact of non-traditional data on the provision of financial services, looking at the South African experience. And then from that study, we managed to lift up what I can say benefits and risks that come out as a result of that. So some of the benefits that we've managed to identify were the benefits of financial inclusion, whereby now FSP, through the use of non-traditional data, they are able to reach to a broader sector of society. You've got a benefit of affordability, whereby FSP, by using non-traditional data, they are able to come up with products and services that are more affordable through the insight that they're able to generate from it. You've got a benefit of customization, benefits of personalization, whereby this FSP, through the insight they're able to generate from that data, they are able to come up with products and services that are designed specifically to meet consumer-specific needs. However, there's also a downside, as you've alluded, which is risk. And some of the risks that we've managed to identify were the risk of, for example, transparency, whereby consumers are not aware of which data points of them is being collected, where it's being used, and what is being used for. So they are not aware of that. There's the issue of privacy and misuse, whereby you find that consumer data is being collected and is used beyond the scope which the consumer has been informed that is going to be useful. There's also a risk of discrimination that comes of it, where you find that now, because these FSPs, they've got more granular data about consumers, the issue of discrimination kick in, whereby now people based on their race, gender, and also probably where they reside. And as a result of that, you find that some of them are excluded from accessing a certain financial product and services. Lastly, what we've seen, there's also an issue or a risk of security, whereby you find that there's a certain liability framework in place, whereby if data is breached or is lost, the FSP will be held accountable. So those were some of the risks that I can highlight and benefits in the nutshell.
Thank you so much, Mr. Avelani. May I request that we move to the next slide? I just wanted to highlight a key point, a very good analysis that could benefit everyone's attention. So maybe Mr. Avelani, if you can spend a minute to take us through this analysis that you have done on data management benefits and risks of the FinTech survey, Mr. Avelani. Thank you.
Thank you. Thank you very much. I'll gladly do so. So if you look at this chart, what we're actually doing with it, we're looking at the extent in which FSPs in South Africa are making use of novel technology and are able to benefit and are also able to realize risk from the use of non-traditional data. For example, under data management, what we managed to find out is that there are actually a lot of FSPs in South Africa who are actually sourcing the non-traditional data from smartphones, social media, and any other digital device that are out there. Hence, if you can see on my right, the overall scale was good, meaning that we actually have a lot of FSPs that are actually making use of sourcing non-traditional data from all these digital devices that are available there. We also find out that most of these FSPs and fintechs, they are also using novel technologies such as screen scraping to sort of pull this data into their systems. We found that a large number of them are actually doing it. Hence, the overall scale on my right here is good. In terms of processing, we found that very few of them actually are using novel technology like AI, robotic processing system, machine learning, and all that to actually process this non-traditional data. Most of them are still using your traditional technologies to do that. And then in terms of benefits, we found that very few, in fact, FSP have actually managed to make use of this non-traditional data to sort of to come up with product and services that are specifically meant for consumer needs, that is personalization. However, we found that most of them are actually now at the moment able to drive insight from this non-traditional data and able to reach a more broader sector of society or community that which the traditional financial institutions are unable to reach or were excluded before. Hence, the scale is good. And in terms of enhancing customer experience, we found that very few FSP have actually managed to make use of non-traditional data to do that. However, in terms of lowering prices, we found that most of these FSP and FinTech are actually generating insight from this data, and they are able to lower prices of goods and services they are offering. When you look at the risks, we found that most of these FSPs, like as I've if I can highlight, they still yet to have sort of what I can say processes in place to try and deal with the risks that are emanating from using of this non-traditional data. Most of them were indicating that when we do this study in South Africa, it was before what you call POPI came into place. POPI is a Personal Information Act that is meant to protect consumers' data. It was before it became in effect. And as a result, most of these FSPs, they were their own policies in place to try and safeguard consumer data that was in their position. So most of them, they didn't have frameworks in place to try and make sure that the risks that are emanate from this use of non-traditional data, it's actually arrested. Hence, you see the scale is basic overall. So in a nutshell, that's a summary I can provide.
Thank you. Thank you so much, Mr. Avalani. I think the analysis is very clear in terms of the benefits. You clearly see that the usage of data is helpful in advancing inclusion, is helpful in delivering lower prices to the customers, but the risks related to data protection, data privacy, data transparency and all remain actually. Again, a clear indication that there is potential, but the task of regulators is quite cut out actually. Thank you so much for that intervention. At this point, let me also bring in Ross. Ross, may I request you to please come in and share your thoughts on the overall benefits and risks that usage of data in the delivery of digital financial services brings in. Thank you, Ross. Over to you.
No worries. Good evening, everybody. In terms of the benefits, I think a lot of them have been covered, but just to perhaps rephrase them in my own terms. Certainly access to financial services. I mean, take, for example, digital credit. You can use all these non-traditional forms of data to create credit scores for people that may never have had access to digital credit before. So that can bring them into the market. Similarly, for insurance products, for example, they can be designed and marketed in a way which is much more effective than has ever been the case before. Other benefits include, Diaz mentioned COVID-19 and emergencies where you need data, personalised data to be able to work out who's entitled to, for example, cash relief, cash payments, emergency credit. So it can be very useful in that context. And the other benefit I wanted to specifically mention was the use of data to create digital IDs and national ID systems, which is obviously critically important for access to financial services. So they're the clear benefits. Just quickly on the risks, I think they've been very well discussed, but I really want to emphasise the lack of control over their personal information that consumers have. They usually will have no idea what data is being used, for what purpose, by who, how it's collected, what their rights are, how they can exercise their rights. So there's, definitely benefits. I don't want to suggest that there aren't, but one of the key risks is the lack of control over data that consumers have. And there are many other risks too, but that to me is one of the absolute key risks that we should be thinking about.
Thank you. Thank you so much, Ross, for that brief intervention. At this point, I would like to invite Madam Patricia from the Data Protection Authority of Ghana to share her overall experience of how data privacy and the existing regulatory framework on data privacy is helping advance digital financial services and financial inclusion in Ghana. I invite Madam Patricia at this point, please. Thank you.
Hi, thank you. I'm not sure if you're seeing me. I'm not seeing myself on the screen.
Yes, we can see you, Madam Patricia.
But I got your question clear. So in Ghana, there's so much happening in the ecosystem. Ghana as a jurisdiction, as far as data protection is concerned, is waking up to the needs of data subjects as you defined earlier on in the financial sector. You call them your customers or consumers, but it's the same thing. They're just waking up to the fact that these individuals are empowered to have some rights in the ecosystem, whilst they themselves are, using the digital innovation and creativity to apply the inclusivity that the financial ecosystem requires. So you will see that there's a lot of innovation coming up. And in Ghana, we have a majority of small to medium-sized industry in the financial sector. If we set aside the very large international process, there's a very large section of our ecosystems, small to medium-sized, innovative, creative ideas powerful payment gateways being developed, apps, mobile apps, and that for our ecosystem is very positive because it allows the inclusivity that we require in our rural and even sometimes urban communities. That aside, it addresses a lot of our challenges to do with the language barrier, literacy, limitations, and even the opportunity to travel around easily with the lack of efficient transportation to banks and the sheer overload of work on the main high street banks. The presence of financial inclusive systems and mobile apps is really making it flexible for all of us. Indeed, I have started using my mobile app for transactions, and and I now feel so lazy to go to the bank because it's so easy to do it from your phone. But what we as regulators are looking for is not to disable this very successful, inclusive delivery. But we're looking for more opportunities to enable privacy-enhancing technologies. And when we say privacy-enhancing technologies, we want the financial sector to consider the diversity of the consumers, the ability levels, the different cultural backgrounds, and availability of other, or let's just say even awareness and understanding of their consumer base, to make it an all-inclusive and simpler delivery by taking into consideration a more proactive ways of addressing security, the risks, and enabling data protection, data subject participation in decision making. That is one of the key principles in the Ghana Act. If you look beyond the general, more common need for accuracy, need for quality, in our Act, we have the need for data subject participation, for an individual to feel able to be contributing to the decisions around how their data is processed. So when we look at apps that allow you to make decisions, to change settings, have privacy settings, and also to involve those who can't actually read and write by adding other enhancing technologies like visuals, icons, that allows those who can read to actually participate and be informed about how you use the data, especially information that enables them to give you a more explicit consent in how you process the data. We encourage the use of audio, or local language chats, or use of visualized messaging that allows people to get the message without having to read. And all of that, we believe, promotes inclusivity and makes it a fairer ecosystem for everyone to participate and to enjoy the good things that are being delivered in the ecosystem. I'm all for more digitizing of the financial delivery because it makes our lives simpler and easier, and I'm enjoying it too. But I also think about those who need a little more enhancement in the delivery of this technology to participate better. So all in all, we look at how it's helping the ecosystem. And also as a regulator, we consider the reasonable expectation of the user. What will be their minimum baseline requirements of their data controllers, such as yourselves that deliver a service to them? What will be the basic minimum? And I, as a regulator, if I have to make a decision, will be looking on that on behalf of the data subject to see how, in the data protection world, when we define the appropriateness of a technology, we're looking at the supply of the technology, their ability to deliver to a certain standard, their affordability, the nature, the scope of what they are delivering, the volume, the sensitivity, the context, and the type of data subject they are serving, the sensitivity of the data. In assessing the appropriateness of the technology, we look at all of these things, and that is from the point of view of a regulator what we will be looking at to assess the appropriateness of a financial inclusive technology or delivery. Thank you.
Thank you so much, Madam Patricia. I have a lot of questions, follow-up questions, but we have a section on regulation specifically. So I'll ask you questions on your last point related to appropriateness, and I'm also keen to know more about the data subject participation in decisions related to how data is processed. But give me a few minutes as we move into the next section.
Sure.
Thank you for your intervention. Maybe I'll quickly go back to Avelani. Avelani, you have a few questions coming in from the floor. So there is a request from Renita. So she asked, would you elaborate on the lowering of costs of goods and services? How is this manifested? What is an example of this? How are they able to offer lower prices? Question to you, Avelani.
Sure. I'll give a practical example to answer this question. In insurance space, for example, there is a use of what you call telematics, whereby the insurer will put a device on your car and they monitor the extent in which you're driving. So, for example, if you drive less per month and if you are driving, it's normal, then the insurer will use that data to calculate a premium for you. Meaning, the more safer you drive, the more lesser the price is going to be for your insurance product. So this is a movement away from a traditional insurance whereby you just subscribe and then they charge you a set premium per month. Here, the premium is now determined by your usage and your behavior. So they are making use of that data. With that telematic devices, they're actually making use of that data to monitor you. So that's one example. Another example, maybe we can say in the lending space, for example, whereby these fintechs are able to go to social media or wherever you are and track your digital footprint. And then with that footprint, you find that some of these people, if they go to the traditional bank and ask for a loan, for example, you find that the rates will always be higher. But with these fintechs, because they see your behavior, they understand you, they've got more insight about your preferences and all that, they are able to come up with products that are tailored for your specific needs and that you can actually afford at a more reasonable prices. So this is how it's manifesting itself. And this is some of the practical example I can see. We also have the issue of pay as you drive, for example, whereby now instead of paying a monthly fee insurance, let's say example of about, I don't know how, for any price, now you can only pay insurance based on how you're driving because they put a device in your car that stores the data and enable them to monitor how often you drive. So those are some benefits that we are seeing.
Okay. Thank you so much, Avelani, for those practical examples. Maybe let me please move to the next panelist, Mr. Gerard from the National Bank of Rwanda. Gerard, if I may kindly ask you to provide examples or perspective from Rwanda, especially given the fact that Rwanda is a growing market with increasing use of digital payments happening, especially in the last 18 to 24 months during the pandemic. So how is data helping not only provide access, but also provide sufficient usage of payments and financial services in Rwanda? Gerard, over to you. Gerard, are you here? Okay, while we wait for Gerard, in the interest of time, let me move to the next panelist and invite our private sector participants. Let me start with Phyllis. Phyllis, I understand you're based in East Africa. If you can provide a broader perspective on how data is being leveraged to offer digital financial services and how it's helping financial inclusion, and also the role of Visa in this data ecosystem. Phyllis, over to you, please.
Thank you very much. And yes, I really do join Hans to agree with the comments, from South Africa and what has also been analyzed from Ghana, particularly on the benefits and the risks. And truly speaking, this is what we see in East Africa. And this is being driven mostly by the level of mobile penetration, internet penetration. And we now see the availability of access to financial services through such devices as mobile or any technology that consumers have access to. And what we've also seen as a trend across East Africa is the governments are moving to put in regulatory frameworks for data protection. In Kenya, we have a Data Protection Act, there's an Office of a Data Commissioner, and we have regulation. Same case in Uganda. The process is progressing in Rwanda, and we see this. I think what is important to state is from a visa perspective, or really from the players of financial services, is that it's really important that we really start establishing data governance mechanism, data by design, so that it actually brings in a culture and where data is valued from the entire ecosystem of the players and goes to the entire ecosystem. And one of the challenges we've seen, like in Kenya, is where you put a lot of obligations on the Office of the Data Commissioner, where, I don't know, for instance, the consumer is supposed to go and fill a form, where they want their data to be removed. However, if we establish systems, and I agree with the representative from Ghana, where there's appropriate use of technology in the design of products, in the design of services, such that data protection is integrated. The principles of data protection are integrated in how an institution organizes itself, it will really be positive. And in Visa, we take that approach. Over 60 years delivering payment services, we've ingrained the values of data protection, and we go beyond, regulatory frameworks to creating our own privacy frameworks, our own internal governance across jurisdictions on the basis of best practices, best global practices that really ensure that the consumer is in control of his data, and more importantly, that the levels of compliance are enhanced. And as Visa, as we move to work with these new players across markets, we see these challenges. And one of the, where areas of partnerships with regulators is really to see how Visa can share these best practices, some of these approaches to minimize the risks that we've actually identified in the ecosystem. Thank you.
Thank you, Phyllis. I'll come back to you on what you're doing with respect to coming up with own privacy frameworks in a few minutes. But this nicely leads us to the next section on policy and regulatory interventions around data privacy for digital financial services. And we already have a question from a participant from Central Bank of Congo. What is the approach for regulating data privacy data for DFS? Should there be one authority that sets the rules for all sectors, or should the central bank be responsible for the financial sector? A very good question, Mr. Christopher Bakila, to start this section. Maybe we can start the section with a broader global overview of how are the global data privacy frameworks like, and what is there for us to learn from the already established data privacy framework. This is coming from an appreciation of the fact that not many of the emerging market economies, AFI member countries, have an existing data privacy framework in place, and even if there is one, it does not reflect the market realities. There was a study conducted by UNCTAD, the trade body of UN. They did a survey of the more than 200 countries, 204 countries to be precise, and they found that only 66% of the countries have existing data privacy framework. The rest either do not have or are in the process of coming up with one actually. So let's learn from what is already there. Maybe I'll invite Yukiko Lorenzo from MasterCard to come in and provide some insights on the existing regulatory frameworks out there. Yukiko, over to you. Thank you.
Thank you. As you mentioned, there are some countries with some omnibus data protection law, but some countries do have sectoral approach, or it could be in the constitution. But what we have at MasterCard sort of used as a standard to apply across our companies is actually the EU GDPR, the General Data Protection Regulation, which many of you may have heard of. It does put some data protection standard quite high, so we thought that we should aim high. So we use EU GDPR as a baseline requirement for all MasterCard entities, and obviously respectful of the different local differences, and we will obviously implement those. But I think it's very helpful for organizations to have a baseline to adhere to, because it is difficult if you try to customize per country always. It's not always practical, but I think it's good to have the baseline standard. So that's how we approach it. And earlier, Phyllis talked about, so organization having a privacy framework. I talked about how GDPR can be a good baseline, but also we talk about privacy by design. We embed that into the product development process. So before you launch the product, consider including privacy controls. As Ms. Adusepoku mentioned about, are you thinking about the context of when you're collecting data, how you're using data? It's really thinking about that is about privacy by design. And so I think we need to incorporate that into the product development. And I think that's a very important practice to have. And as an example, what we've done is that not only creating a very long legalistic transparency or privacy notice, but we created a video that would be more appropriate for a certain audience, so that we explain our data protection practices in a video with visual, which is much easier for people to understand. So there are different examples that we can bring in to make it much easier, data subject individual centric. And that's really, really our core of what we have a data responsibility principles at MasterCard. So this goes beyond the legal obligations, where we aim for use of responsible data, that we think about societal impact and impact on individual and society. So I think it's very important to look at not just the legal privacy framework, but go beyond that and think about, is this beneficial for the society? Is there anything that we are bringing that, for example, bias, discrimination as a result of data use? We need to really think about that holistically.
Thank you. Yukiko, I mean, for me and for many of the participants probably who are not aware of what GDPR is and how it kind of affects or impacts financial services, maybe if you can briefly talk us through about what GDPR is in the next 1 minute, please. Thank you.
Sure. It is a general data protection regulation that's applicable in the EU at the moment. But many countries, for example, South Africa, I think Papua is inspired by GDPR. Brazil has a very similar law. So there are many countries, emerging economies, adopting sort of EU GDPR text in their law, because that has been a sort of many people call it a sort of a gold standard in data protection law. Obviously, each country has different needs and different arrangements. So I know there are some customization. But I think many countries that are looking into upgrading or introducing data protection law has been using GDPR as the baseline text to introduce in the country.
Okay, thank you so much, Yukiko, for that context. Maybe I'll invite Elgin from Tunes to come in at this point. We've heard from Yukiko on the European GDPR regime. Although Tunes operates in more than 100 countries, I would be grateful if you can share some existing data privacy frameworks from Asian countries such as Singapore, Philippines, Malaysia, so on and so forth. Over to you, Elgin.
Hi, yes. So in Tunes is headquartered in Singapore, so we comply with Singapore's Personal Data Protection Act. And other than Singapore, there are laws, like you said, in Malaysia and in the Philippines. So one thing that my experience with complying with global laws like the EU GDPR and Singapore's PDPA. I say global because we span both Asia and EU at the same time. So and although these two laws are quite similar, they have their own peculiarities, and I found that the best way to ensure compliance is to follow a set of privacy principles as a company, and the principles we have chosen to adopt are very similar to what the GDPR says. Now, as to the question of how the data protection or how the privacy frameworks work, I think what is more important is not just who is a sector regulator or what the law covers, what the law says, but more importantly is how the regulators help the businesses to comply with the law. And by that I mean by coming up with guides like the Singapore authority has, and I think and also the Philippines authorities, they come with very good guides to guide the businesses on how to comply, how to arrange to create their own privacy programs.
Okay, maybe we'll learn more about these programs as we speak. Thank you so much for that perspective, Elgin. I'll invite Ross to come in at this point to maybe help us connect the dots between what is happening in the relatively more advanced countries such as Europe, Singapore, so on and so forth, and then what's happening in many of the emerging market economies actually, and how can the existing regulatory frameworks be contextualized to an emerging market economy context actually. Over to you, Ross.
Okay. Yes. Before I get to that question, can I just go back to the question asked by the participant from the Congo, which I thought was, like you, a very good question. This is a question about, well, whose responsibility is data protection in the financial sector for digital financial services? It's in my to my knowledge, most data privacy laws are general data privacy laws. They're not specific to financial services. However, you do have limited, I think they're quite limited, rules relating to data privacy in the banking sector. It could be rules around banker customer confidentiality and secrecy. You sometimes see rules in banking sector codes of conduct concerning data privacy. In national policies relating to the financial service, you may see bits and pieces of data privacy, but it's not common to see, what I would call comprehensive data privacy rules for the financial sector, and in particular for digital financial services, which is why I think the work that AFI has been doing is so important. I just wanted to mention in particular in relation to the paper that AFI has produced, is that we've included, as well as the 6 pillars, we've included right at the end, it's a minimalist data privacy for digital financial services approach for financial sector regulators. So the idea is it sets out some very brief principles, it's a 1-pager on the approach that financial sector regulators in emerging economies or elsewhere might take where there is not a general data protection law that they can rely on. So I just wanted to specifically mention that because it's, I think, relevant to the question, the good question we got from the Congo. But more generally, yes, totally agree with the comments about GDPR being the gold standard. And we are seeing more and more emerging countries basically take up the framework of that law, adapted for local context, and bringing in data privacy laws. I mean, of course, we've got Ghana, we've got Malaysia, we've got the Philippines, Rwanda's coming on board, South Africa, very important, India is very close to finalising its data privacy laws with some very interesting ideas in them. But in all of these laws, you do see threads from the GDPR. In terms of key lessons learned, if you like, I'll just sort of give a couple, I'm conscious of time. Certainly there seems to be an emphasis on a risk-based proportionate approach. So basically trying to develop rules that will work in the country context. So not too much in the way of dampening of innovation, costs of compliance, but on the other hand, trying to understand what the risks are for data subject in the country. In that context, imposing obligations which may relate to the significance of the data processing activities. Just to give you an example, some countries require, and I think Ghana is one, I can be corrected if I'm wrong, all data controllers to be registered. Other countries, such as Kenya, in my understanding, provide some discretion and flexibility within the commissioner to require a data processor to be registered. So there's this sort of flexibility, and the aim is very much to make it a proportionate approach. Separately, we see in this legislation, including in emerging economies, new rights dealing with things like the right to information, to transparency, to limit processing, to portability, right to erasure, the right to be forgotten. So these sorts of, I call them new age rights, are being developed, and they're in GDPR, but they're also in the data privacy laws that we're seeing now. And just to finish, in terms of obligations on data controllers and processors, so say we are seeing new obligations. We've already had mentioned privacy by design. There are definitely new obligations already in these laws, which basically require data controllers to have systems and governance arrangements and resources to ensure that they protect the privacy of the consumers. That's at a very high picture level. And another one to mention is privacy impact assessments for new products, significant processing obligations. There are requirements to conduct these privacy impact assessments. So that's just sort of a fairly quick, very quick summary of what we're seeing. But I think it's just to summarise, we are certainly seeing the threads that we see in GDPR in emerging economies. But ideally, I mean, they are tailored, obviously, and need to be tailored to country context, bearing in mind regulatory resources as much as anything else.
Okay, the point is well noted. I'll specifically come on the points you talked about, the risk-based approach and the minimalist approach that you suggested. I'll come back to them in a minute. Yukiko has her hand raised. Can I request you to please come in, and then I'll invite Madam Patricia. Thank you. Over to you, Yukiko.
Just wanted to, yes, thank you. I just wanted to build on Roz's excellent remark that I think these frameworks are really important. Regulatory frameworks are important, but also equally important, as Ms. Adusei-Poku mentioned, you need to give guidance to small and medium-sized enterprises. So I think when the GDPR came into force, there were lots of questions as to how to comply with them. And I think this is where, in particular, smaller, medium-sized enterprises would need additional guidance. We've actually sort of helped, I think there's a bit of background noise, through Irish Data Protection Authority to help with the smaller medium-sized enterprises, which may not have enough resources and time and effort to comply with the law. So I just wanted to also add that privacy capacity building is very important, that should come along with the regulatory framework.
Thank you so much, Yukiko. We'll spend some time on the risk-based proportionate approach. I want to go back to the question that Mr. Christopher from the Central Bank of Congo raised in terms of linkages between the national framework and the regulations that central banks or financial supervisory authorities come up with, actually. So in that regard, I wanted to invite Madam Patricia, wanted to know how the the Ghanaian National Data Protection and Privacy Framework links to the work that the Central Bank of Ghana does, and how do you collaborate, so on and so forth. Madam Patricia, if I can invite you to come in at this point.
Okay, so in Ghana, the speaker just before me was talking about the how, that the biggest worry for some data controllers globally, not just in Europe, was the how to deliver. And so when we took office, we're looking at the how we can engage data controllers in a way that gives them this framework that you're talking about. But it's such a mammoth task for a small supervisory authority to be having a nationwide mandate to deliver something that is quite critical to business for a majority of our data controller stakeholders who are small to medium sized scale, with this big question around yes, we know we have this legal obligation, but how do we meet it? And so some of the key things we've done is to have a cross-functional collaborative effort with other peer regulators who already had databases of their members or service users or other stakeholders within the group that were defined as data controllers in our view. So as far as the Bank of Ghana is concerned, to us, they are peer regulators, they regulate the financial sector, and they had the database of all financial sector data controllers. So like other regulators that we have connected with, we've connected with the Bank of Ghana, and we've asked them to ensure that every data controller or a new bank that wants to connect or register with them or comes to renew their registration meets their minimum eligibility criteria, which should include registration with the Data Protection Commission. And this was mentioned by Ross. In Ghana, data controllers have to register. This was the case in the UK, and it still is the case, although the registration process is quite different post-GDPR. Many European countries also require the registration in one form or the other. But in Ghana, the registration is critical for us because it brings these data controllers onto our radar. And as they register, we are able to group them into sectors, industry bodies, groups that require more bespoke outreach or education around their sector and its application of data protection obligations. And in so doing, with the Bank of Ghana, getting their regulators to come to us, register, get a license, be on our radar, we've been able to group different types of financial sector players in our ecosystem. We have the non-financial Bank of Ghana groups, like some of them, groups like the Forex bureaus, those who do Forex, those who are insurance companies, doing some sort of financial insurance something. We've got the pure financial people, the banks. Then we have the groups that are like developers of financial tools and apps. We've been able to have these groups categorized and grouped so that we can begin to customize guidance and support for these particular groups so they can understand the critical need to do in their business speak. So it's not just that the law says that you must have, for example, you must ensure that you're enabling data parties. I'm just sticking with the terms I've already used here. One of the principles that you must have accurate data, it must be quality data, and then you must enable data subject participation. Now, in the financial sector, what does it mean to have data subject participation? It's one thing to have the law. It's another thing for the law to provide you with principles. But then when I say putting it in their speak, we are now supporting them to understand what it means. What it means to have data subject participation in the financial sector, a particular category speak. So supposing I was dealing with the developers of apps or privacy enhancing technologies for financial sector, and we say we want privacy privacy enhancing technology that enables data subject participation. We are looking at what can they implement or add to their usual development tactics that enables this principle, so that they can have specific evidence to show for accountability purposes that yes, we are enabling that for the customers. I would advise them that don't just provide a system that gives you a login. Yes, that's good. That asks the customer for a password. That's good. But privacy enhancing technology in that login framework would be one that prompts you that your password is going out of date, that prompts you to do two-factor authentication, not just prompts you to say that password is not long enough and it's not secure enough. Those are privacy enhancing technologies, you see. But these are the basic things that we take for granted, we do every day, but some systems don't have it. And so it puts the data at risk because they can easily be hacked. The system that tells you that you've used this password before, so change it. You know, or this password would be better if you added some alphanumeric digits instead of plain your dog's name or your mom's name or something. So those are privacy enhancing tech. It's pushing the user of the app to up the security of their access. So those are the kind of things that we will put, and now that I put it in this way, it's easier for you, the expert of the area, to understand what I need as a regulator from you. So we do this by, when they register, we categorize them into groups and we create training and awareness that they can relate with. Fantastic. That helps them to be more accountable and supports the needs or the reasonable expectation of the data subject more. So that's the kind of thing we do with our regulators. And you cited Bank of Ghana. So this is a typical example of what we do in that sector. And for Forex bureaus, for example, we said, okay, we know that you're in the financial sector, but you're not a high street bank. And most Forex bureaus in our country are 1 month or family-owned businesses. And so we have bans for registration, and we get to meet them as a group. We went to their meetings and we decided that yes, we will give you additional support, more support than we would give to a bank. We may say that Forex bureaus don't have to appoint a full-time data protection officer, but that category of financial sector users can apply to data protection as a service. Because it's not reasonable to expect them to appoint a DTC. So we support them in ways like this, with guidance, with understanding the business needs and the challenges they're having to address in meeting their obligation. So instead of insisting that the law says you may appoint a full-time data protection officer, and for financial sector, they're very rich, they're banks, they're all appointing data protection officers, but you must do the same. We look at the category, we look at their specific needs and challenges, and we support them. So we have said to them, you shouldn't pay the highest band that by default was the case for all financial sector registration. You bring it to the middle band because you're not in the small single man, one-man band business group, but we recognize that you're a medium scale, a small to medium scale, and we can support it. So we do a more detailed guidance for them. We support them directly if we have to, and then when they are able to, encourage them to subscribe to a service, for example.
Thank you. Thank you so much, Madam Patricia. A fascinating example of how we look at data privacy from the prism of proportionality and risk-based approach, actually. A big multinational company with a huge balance sheet and revenue with a market dominant position may be able to withstand the penalties, the fees, the requirements that come with data privacy and protection requirements. But a small business or a startup or a fintech company may not be able to do that. So taking a proportionate approach, an approach that is suitable to the type of company, to the nature of business being done, is a way forward when it comes to data privacy. Thank you so much, Madam Patricia, for that intervention.
Thank you.
I see we have two questions from the floor. Momo and Victor has asked questions. I'll take them up in a few minutes. Meanwhile, I'll request participants to ask questions if you have further questions to ask based on the discussion so far. Next, I invite Avelani. Avelani, again, want to get South Africa's experience in terms of policy and regulatory interventions related to data privacy. You did a fantastic job in terms of doing a data protection privacy kind of an assessment. But based on those learnings, findings of the survey, what specific actions has the FSCA taken in order to address the risks that we saw in the slide that you just took us through, Avelani?
Sure. So our actions were sort of, I would say, two-way or two approach. The one approach was, let's look at POPIA as our guideline, because it's an overarching sort of data protection law in South Africa. However, when you look at POPIA, it's very general, but however, it does one way or another address some of the risks that we identify from our findings. So that was the first approach, was that let's adopt POPI, because it will help us address some of the risks that we actually identify. However, over and above that, we also propose some specific sort of guidelines or practice, which as a regulator, we can put in place to make sure that we deal with those risks. For example, at licensing, one thing that we put in place was that if a FSP or a fintech come asking for a license, the issue of data protection, all the risks should be clearly unpacked, and make sure that as one of the licensing requirements, those fintechs make sure that they convince us that they'll be able to address or deal with those risks as identified. The issue of consumer education, for example, was also highlighted that as a conduct regulator, we should be in a drive to educate consumer about how their data is being used, especially on the provision of financial services, since we are playing in the financial space. How is it being used, how is it being collected, how is it being stored, and for the consumer to be aware of the rights which they have. The other avenue that we also look was that from supervision also, the supervisors should have a sort of identify all those risks that are emanating from use of non-traditional data and the provision of financial services. And when they do their supervision work, they should start addressing those risks as identified. We also look at the issue of the sandbox. We've got a sandbox in South Africa where we are able to invite fintechs who've got innovative ideas to come and test new products and services. We are seeing with what's happening in our environment with the open finance and all that. How about if we open our sandbox and allow these fintechs that want to go and play in open finance, open banking space, come and test their product in our sandbox, and then we will sort of able to gauge the risks that emanate from that, and then we'll have an empirical evidence whereby we'll have a way to respond to the risks that are coming out of that. So those are some of the guidelines that we put in place over and above relying on the overarching policy, which is the POPIA that is currently in place.
Thank you so much, Avelani, for the context and information of colleagues. POPIA is Protection of Personal Information Act of South Africa. I've shared the link to the act for colleagues who are interested. Yeah, not to be confused. In Asia, POPIA means a snack to eat. So I got confused when you said POPIA initially, Avelani. But this is the Information Protection Act of South Africa. Well, maybe before moving to the next section and taking the questions that have come from the floor, I invite Ross. Ross, you talked about the minimalist approach actually. So countries like South Africa, they have a data protection regulatory framework already in place. Countries like Rwanda, they already have a regulation, national regulation in place. But there are many countries that do not have a existing national framework on data protection and privacy. And even if there is one, there is no data protection commission, or there is no specific arrangement for supervision and enforcement of such frameworks within various sectors, specifically financial services spaces actually. So in this context, you talked about the minimalist approach that financial service regulators can take, Ross. So if you can, in the next 1 or 2 minutes, talk further about this minimalist approach. What does it look like, and what are the key elements of this minimalist approach that you talked of, Ross?
Sure, I'm happy to do that. So perhaps I think the simplest thing to do would be to just run through the key points of the minimalist approach that AFI developed for the purposes of the paper that we've referred to. This is very much, as Guy says, it's designed for a country, excuse me, that doesn't have a data protection law. Doesn't have a data protection law in place and probably has very limited financial sector resources, but has concerns about data privacy. So the first point was, or suggestion was to conduct a high-level assessment of the digital financial services market and the related data privacy risks in the relevant countries. This is really very much trying to understand who is doing what in terms of data processing in that market. Is it the traditional players? Is it fintech players? What sort of technologies are they using? What sort of tools are they using? What's the risk of harm to consumers with the approach that they're taking to data privacy? So it's really, this is the first step, is very much understanding what is happening in that jurisdiction, in that country. So it's not jumping to solutions, it's understanding what the risks are and developing a risk assessment methodology to sit alongside that. So that's the first step. Second step would be to implement a broad-based consultation. And, you know, this is, put simply, it's consultation with industry, of course, both traditional players and fintech providers, with other government agencies, ministries, obviously very important, with consumer groups, with privacy advocates. So you've got your mapping of the risks, you consult to further enhance that understanding and to discuss proposals that you may be thinking about for a framework to deal with these issues. The next step would be, assuming that you want to take a risk-based proportionate approach, you only want to impose obligations on significant data controllers or processors. The next step will be to say, well, what do we consider are significant? What does significant mean in this context? And you might look at factors such as the types of data that's processed, the volume of data that's processed, again, risks of harm to subjects from those processing activities, and the sorts of technologies that are being used that may be a concern. So that's establishing who's significant. And then developing the rules. The first suggestion was, you have rules relating to privacy by design. That's requiring processors and controllers to really build privacy into their systems. This is being proactive. It's accepting the limitations of the consent model, for example, as far as data subjects are concerned. And then the other suggestions in this context were transparency of information, effective and informed consent. I could talk a lot about consent, but I won't. And recourse rights for data subjects, setting up some sort of mechanism, maybe in the central bank, if you don't have a data privacy commissioner, where people can go with complaints and where they can exercise recourse rights. Okay, so yeah, going back to significant data processing controllers, you might then also think about in this context about what are the rules you're going to impose on them. And they might be about registration, having a data privacy officer, conducting privacy impact assessments for significant operations, requirements to report significant breaches to regulators and data subjects, and independent compliance assessments, say on an annual basis. And second last point was to build consumer awareness of data privacy. Very important, as you know, our representative from Ghana has said, Patricia has said, and ongoing consultation with key stakeholders. So they're what we thought were the principal things that you might do as a financial sector regulator who doesn't have a general data privacy law in place.
Thank you. Thank you so much, Ross, for taking time to take us through the key points. I have highlighted them in the chat box for colleagues, for participants for their reference, actually. A minimalist approach towards data privacy for DFS regulation that financial service regulators can consider. Well, let's move to the questions that have come from the floor. I will invite the private sector partners here to come in and share their experience. The question is from Momo. Is it possible to achieve minimal or zero risk with data governance procedures in place? Both MasterCard, Visa, you did talk about having data governance processes and principles in place. So how impactful has this been in terms of mitigating the risks related to data privacy? Your experience. Maybe we can start with Yukiko. I'll invite Visa after that. Thank you.
Thank you. Yes, I think that our privacy by design frameworks is slightly different from data governance framework. It really serves well. It's really about balancing different risks and also benefits to the organization as individual. And unfortunately, as any private organizations running business with data, there is no possibility of zero risk. I think we'll be shutting down our businesses. But I think it's really about balancing different risk factors and then come up with a sensible solution in the context of which we are processing personal data. So, for example, if you are developing a mobile phone app, are we by default taking all this, for example, geolocation tagging off, for example? And obviously, there is an interest for organizations to track that so that you can perhaps tailor certain offerings to the mobile app where they are located, but some individuals don't want. So can we make sure that we have those choices embedded so that if the individuals want that feature, they are able to enable it. If they don't want, that should be off by default. But I think individuals should be empowered to make that a decision. So we have to make these sort of risk-based decisions. What is the most sort of benefit for the individual and also organization? But it's really a balancing act. And I think that privacy by design framework and also overall sort of baseline on basic requirements across the organization will help guide that to achieve that balance.
Thank you, Yukiko. May I invite Phyllis to come in and talk about the data governance principles from a Visa perspective? Thank you.
Thank you. I think not very different really from what we've been talking about. And what is important for Visa is, first of all, what do we do with data? And we begin by the legitimate use of data, that we use this data to process payments globally. So the compliance of data, is in the design, is even in what we do. And therefore, from the highest level, we've developed data values that clearly create basic principles that the entire organization abide with, which helps us to really minimize the risks that are related to data. One of the clear risks, and this was alluded by Awelani in his survey, is security. So what do we use the data for? We use the data to ensure that we can minimize data breaches, we can minimize fraud and fraud or any risk related to the security of the data. we've established robust cybersecurity resilience governance mechanism internally within the organization to ensure that consumer data is actually protected. One of the most innovative approaches is what we call tokenization, where we devalue data. So it doesn't matter who gets, if the data gets breached. The bad guy or the bad guy who gets access to that data would be useless. So, you know, developing these internal governance mechanisms, developing values and principles of security, of control, of putting consumer at the center of managing their data is so important because it goes down to the level of the entire organization. Additionally, we've created a data council. We have a data policy framework internally that guides. If you go to our website, we have, you know, very simple ways to communicate to consumers where we use our data. And in the event that we reuse data for some other purposes, that then we must require express consent from consumers to use that data. One of the other areas that I'd also like to point out is what was raised by Lewan in terms of discrimination created by these tools, you know, algorithms or AI. And we really ensure that as we make this analytics, because, you know, big data is important to create analytics, which create value to consumers, you know, the benefits of a customized product, the benefits of personalization and all those benefits. We ensure that the models that we use to create these analytics, to formalize our intelligence, are so robust that each time you are looking out to ensure that there is no discrimination. And beyond that, we really ensure that there is no misuse of the data, that it not only complies to the basic, and yeah, you know, Ukeko and RAS have actually highlighted to the basic, you know, gold standard, the GDPR. Which is a good model to follow. But even where the countries don't have those regulations, I'd like to state this, even where there are no regulatory frameworks, you find those countries have some basic provisions in their constitution, in their Cybercrimes Act, in their financial sector laws that really require privacy. And therefore, the advantage of the GDPR is that now we have minimum principles that we can incorporate in our own design, you know, and Yukiko has talked about product, you know, beyond the product itself, it's really what you are doing as a financial service provider. What are you collecting this data for? Are you ensuring that it's minimal? Are you ensuring it's for that purpose? Are you ensuring that the consumer is well informed why you are using that data? And are you also ensuring that in the event of breach, that you will ensure that your systems are robust to protect the consumer data from breach? And therefore we talk about data security. Thank you.
Thank you. Thank you so much for that detailed response, Phyllis. I'll invite Elgin at this point. Elgin, if you want to add to the discussion on the point related to data governance and privacy by design, please go ahead. Yeah, there's another question from the floor on data protection and privacy for cloud computing and cross-border data sharing, actually. So that's also a question I will request you to address, Elgin, in your response. Thank you. Over to you.
Okay. Well, I just wanted to put some structure to what Yukiko and Phyllis were saying. I mean, they have very good practices at MasterCard and Visa. But I think from a smaller organization's point of view, you know, there are a lot of best practices out there, but it's very hard to start or to know where to start. So one of the things that I like to do is to look at data as a life cycle. The data has a life cycle. So we look at the point where data enters the organization, where it's collected. Then we look at how we store it, and we look at who's using it, who has access to it. And finally, we think of, okay, is it being shared outside of the company? And how do we dispose of it when we're done with it? So throughout all these stages of the data lifecycle, there are very specific data protection and privacy considerations. So for example, when at the point of collection, do we tell the consumer what we're using the data for? How transparent are we? And when we store the data, what are our data security measures? And when we talk about who has access to it, who do these people really need access? What do they use it for? And do they have the absolute minimum that they need to to do their job? And lastly, when we talk about deletion of data, do we know how long we can keep the data for? And at which point do we delete it, and how do we delete it securely? Okay, and this brings me to my next point of transfer. When we talk about, okay, do we need to transfer data outside of the company? And then one of the key questions here that I always talk about is which country are we transferring the data to? And then we have to look at, okay, what are the relevant laws and regulations that apply? And one common principle that has come across that I've seen in the Singapore's laws and in the EU is that the regulators or the regulations, they require the data to be transferred to a country with equivalent protection. So practically this means that in the EU you have a standard of data protection, and you as a company you cannot lower that standard by transferring it outside to another country with a lower standard of protection. And that is why the EU requires contractual obligations onto the receiving party. So yeah, I'll just quickly talk about the cloud computing part. This comes down to the risk assessment, and then cloud computing is a technology. It's the risks are known, and know that the best practices are out there, and you just need to know and to apply them. Thank you.
Thank you, Elgin. Phyllis, you wanted to come in at this point?
Yes, I just wanted to add on the cross-border data flows. And yes, I would join, what the last speaker just said, that in most, where in line with the GDPR and where countries have the data protection laws, they require reciprocal transfer of data to a jurisdiction that has similar regulatory requirements. However, in Africa, as you have seen, there are very few countries that have now passed their Data Protection Act. And so we really, when you talk about cross-border transfer, there are very few countries that would be able to have that. So one of the encouragement for regulators in the room, in countries where there is no framework, is to really move ahead to create these regulatory frameworks to allow proper cross-border transfer of data across Africa, so that then that works, because otherwise then you are talking about jurisdiction outside. What we have seen under that requirement is to also encourage regulators to list the countries, instead of just leaving it open, creating a white list of countries that they believe have reciprocal jurisdiction would create more clarity to players. And we also encourage regulators to encourage cross-border transfer of data. And, when you talk about cloud computing, you're really talking about storage of data. And, you could even go and create maybe a policy or guideline on what you consider would be a proper cloud policy. I've seen South Africa has tried to do that. In other jurisdictions, maybe they would give a bit of minimums. But what we believe as Visa is that cross-border data flows is extremely important towards the support of global trade and e-commerce. And we really believe that, it's not where the data is, it's really how it is stored, how it is used, how it is transferred. And as long as there's that commonality and, understanding between regulators, then that would not be a concern. Thank you.
Thank you so much, Phyllis. I invite participants at this point to come and to respond to the point that Phyllis made on the importance of cross-border data to create efficiencies and also to be able to provide efficient financial products and services. Actually, do you agree? Do you think cross-border flow of data should be encouraged, especially flow of financial data of the consumers? If you agree, just a response saying yes would be great. If you don't agree, just type in N And if you have any explanation, please feel free to add in. Meanwhile, I'll invite Yukiko to come in and respond. Colleagues, participants, please respond by typing yes or a no to my question on cross-border data flows. Yukiko, thank you.
Thank you. Yes, I think that perhaps what I might say might influence or have an impact on people's response to your question. Obviously, we talked about product development earlier in the session, but I think another thing to think about is financial crime, which does not think about borders. It's typically cross-border. And in terms of use of data to prevent financial crime, such as money laundering, or it could be fraud, sometimes those crimes are cross-border in nature. So I think that there are some really cases that are actually really important for cross-border data transfer because you can't just look at data in silo to be effectively able to deal with or manage and prevent and detect financial crime that are cross-border in nature. So I think that's another aspect to think about, perhaps especially for financial services sector.
Okay. Thank you so much. I think you managed to create a bias in the responses that we might probably get, but the point that you made on the importance of cross-border data flow, especially from the perspective of ML and TF related aspects is really very important. Maybe at this point, I'll invite Madam Patricia to come in and share your experience of how you collaborate with data protection authorities within the region and beyond in the interest of ensuring data protection and privacy, especially within the context of cross-border data flows. Madam Patricia.
Thank you. So I'll start within our region. There is the AU Convention on Cybersecurity and Data Protection, the Malabo Convention, that sets the standards for cross-border processing within the region. Many of the countries with Data Protection Act and those without the Act are aware of this convention. However, only about 6 countries have actually ratified that convention. And the challenges as to why that hasn't happened is a lot, from political reasons to the commission authority level challenges that hasn't let that happen. However, across the world, the convention from the Council of Europe, the Budapest Convention on Cybersecurity, and the Convention 108+ convention that allows the whole world to set a standard by which they will share information around the regulation of data protection and its requirements, is more popular. And the countries that have signed up to this is about 126 globally, and more than 60 of these countries are outside Europe. And so there is a more commitment from the global perspective than within the region itself. And this sets a standards for us, the authorities who are within the scope of that, to understand the best practice that is accepted globally around how we regulate the use of data, more specifically concerning transborder requirements. And so that allows us to, even if we don't have a regional specific standard, to have a wider level international community respected standard that by which we will liaise with each other or align our work with each other, such that if there is a need to have cross-border management of data, that we have a set standard by which we cooperate with each other. That has been very helpful for us, the African commissioners, knowing that in the region, it hasn't really worked as successfully as the grander global one. Having said that, certain countries have bilateral agreements and arrangements, or more specific agreements at the project level or on a case-by-case level on how to deal with particular sets of data relating to a project. And for Africa, we're making do with that because movement across Africa is more complicated than you can imagine in terms of the diversity of language, diversity of cultures, the political willingness, and all sorts of blocks that are in the way to setting an African specific standard that will support the way we manage our cross-border processing. Additionally, the pace of technological advancement and the pace of digitization varies from country to country. Those who have embraced the use of digitized forms against those who haven't really woken up to the fact that something is happening on the global landscape. All exist within the African perspective. And so it's quite choppy, if you ask me, as to tell exactly how it's being managed. I won't be able to give you one answer, but I can, if you give me a specific project, then we can look into how it's happening. But it's hard to answer the core within the African context. However, we're looking at the global standards and we're pushing. I happen to be the Anglophone lead for African Data Protection Commissioners. And these are some of the areas on which we are pushing for action. Also, I have been consulted as the Ghana lead for data protection on the harmonization of data protection rules led by the African Union for Africa. And as of October last year, we agreed the standards by which we harmonize the rules. And one of the areas that was discussed at length was the cross-border processing. For many reasons, including the cross-Africa continental free trade agreement that requires the movement of data across the region freely to enable this free trade business to happen. All of that has brought to the fore the need to really establish a cross-border arrangement. And so I was one of the case study nation leads that worked with to set the standards that are required. And again, yes, here we looked at the European standard, what is happening internationally in the global community as our best practice to set the standard for the African region. So work has started. It is slowly but surely and steadily progressing through the channels that there be to enable the setting of proper standards for Africa for cross-border management. But as we stay here now and speak, there isn't a one answer for that question.
Thank you for that very insightful response, Madam Patricia. Although, I mean, there are obvious advantages of cross-border data transfers for financial service and financial inclusion. There are many policy, regulatory, and other sensitive issues that need to be addressed in order to facilitate that, is what I understand. Thank you so much for that. We have about 15-20 minutes more to conclude. A very important point that came up repeatedly during the discussion was also on the possibility or the risk of discrimination, bias when it comes to usage of data or the models in which the data goes into actually. So I'm very keen to hear, maybe firstly from a regulatory standpoint, I'll invite Avelani to come in and get a regulatory perspective on what is FSCA doing in order to look at reducing the risk of discrimination and bias, especially when it comes to vulnerable segments like gender, like elderly, youth, so on and so forth. Avelani, thank you.
Sure. So based on the study that we conducted, I think one of the recommendations that we actually put forward in order for us to deal with the issue of discrimination, especially when you look at the models that are being used, let's say to grant a loan and all that, we put a specific sort of guideline where we indicated that an FSP should be in a position to explain to a consumer, for example, if a consumer applies for a loan and you find due to the sophistications of the model and all that, that loan is declined, So the FSP should be positioned to apply, to explain to the very same consumer how come he was unable to get a loan and what was the reason why. Because it shouldn't be just the fact that, okay, our models are just rejecting you because they should be in a position to go to their level and explain to them what actually happened. Not that they should be technocrats in actuarial science modeling and all that, but they should at least have some basic information they are able to converse with the consumer who feel aggrieved as to why the model is saying they don't qualify for certain financial products and services. So we shouldn't leave the entire response. We shouldn't just say because the model says so, then that's the end of the story. Then there should be that mechanism available for those consumers to be able to be explained. And then, they should, if they feel like they are not happy about the outcome, then there should be a dispute mechanism in place whereby those consumers should be able to lodge a dispute, and then they can challenge whatever outcome that is coming out of that. However, we are also mindful of the fact that, FSPs have a right to design models whatever and wherever the way they want. But however, over and above that, as someone who's enforcing the protection of consumer rights and make sure that consumers are treated fairly, we are also putting it squarely at the hands of FSP to make sure that whatever models they adopt, they should be able to explain them in order to promote the spirit of fairness in terms of treatment of consumers, especially the most vulnerable ones, as you are indicating.
Okay, thank you. Thank you so much, Avalani, for that very brief and pointed answer. Madam Patricia, I think Ghana also has a similar approach when it comes to algorithms and models that are used in order to offer products and services to consumers. What approach is Ghana taking to eliminate any bias, unconscious, subconscious bias in the form of gender, so on and so forth?
We haven't had much complaint around that gender bias, either that or we haven't conducted the survey to really come up with the statistics against the use and uptake on a gender balance from the Commission itself. However, we promote fairness in the delivery of services as a part of our policy, the Commission's policy around transparency. So transparency always works with fairness. Our theme in the Commission in the last 3 years have been transparency, trust, and transformation. And we promote this in every event that we deliver in our roadshows and education customized for entities and data controllers in general by pushing for enabling transparency, promoting the right to be informed from the accountability point of view, encouraging data controllers to consider fairness as grounds for, as part of the service delivery mandate and in their charters to evidence how they go beyond transparency to enable fairness. And that we feel covers this point quite well in the sense that we promote that every data subject is treated fairly. So that for us is a good approach in the sense that if a data subject doesn't feel that they're getting fair treatment in how financial services, for example, is delivered digitally, they know the channels to use complaint to us. Moreover, we also look at in the addressing of appropriateness of technology from our perspective of scrutiny. Look at where this is enabled. The transparency and fairness that we promote is enabled in the tools and technologies that are delivered. So that, in a way, is how we're looking to make sure that it's not just gender for us; it's all age groups and the whole demographics that are able to use financial services. We look at it from that lens.
Thank you so much, Madam Patricia. Before I move to our private sector colleagues, I'll quickly invite Ross to address this very important point of gender sensitivity when it comes to discrimination and bias when we see in the models where data is used. Ross.
Yeah. Okay, thank you. Just on the issue, if I can respond more generally, Giaz, if that's okay. I wanted to mention there's a few countries do deal with this issue of automated processing of data and profiling. And it might be profiling on a gender basis. It might be profiling on any other aspect of vulnerability. The EU, for example, in the GDPR has a vision, it's quite strong, which says, in effect, that a data subject has the right not to be subject to a decision based solely on automated processing, including profiling, which might significantly affect them or produce any sort of legal effect. So they've got the right not to be subject to those sorts of decisions. However, there are, of course, exceptions where consent has been given or the profiling or is necessary for the delivery of a contract or has been otherwise authorised. So that's the EU. The Philippines has a similar rule, and I think Ghana as well has rules on this point. So I wanted to mention that. I mean, the question, of course, is, and this goes back to Awalani's comments, how do you explain these models to consumers? You might have a right to object or a right to have an explanation given to you, whether you're a woman or any other vulnerable group that feels they've been discriminated against. But how do you actually explain how these really complicated models, which may be based, are going to be based on all sorts of, algorithms, machine learning, they're constantly evolving and changing. How do you actually explain it to them in a way that makes sense to them? And that's sort of a question without an answer, I think. If I could just also mention, it's sort of a related issue, something interesting in the Philippines. This is mentioned in the AFI paper. The National Privacy Commissioner there issued guidelines on the processing of data for loan-related transactions. So this is the use of this alternative data, mobile phone scraping, use of social media data, use of, basically it can be tens of thousands of different data points to create a credit score. Anyway, the Privacy Commission in the Philippines didn't really like what it was seeing. And so they issued this guideline, which really restricted the use of alternative data by online lenders in particular. And separately, the Securities and Exchange Commission in the Philippines revoked the authorization to operate of some of these lenders. So this is sort of a fairly, very strict response, if you like, to the sorts of data processing we've been talking about that may affect vulnerable groups as well as consumers more generally.
Thank you.
I think
Thank you, Ross.
quite interesting, the Philippines approach.
Yeah. Thank you so much, Ross, for sharing diverse approaches when it comes to dealing with processing of data and possibility of misuse or discrimination in the use of data. A very interesting question that Renita asked, which I would like to ask the private sector partners on. So we are already seeing a big gender divide when it comes to access to financial services, ownership of digital devices, so on and so forth, actually. This also possibly translates to the divide in terms of the presence of digital footprints to be able to be used in developing products, processing data, so on and so forth, actually. So there's a evident divide there also, actually. So keeping all this in mind, do you think increasing use of data will further accentuate the divide in terms of gender? And how are you as private sector players dealing with this issue specifically? And if you can quickly respond in a minute, we can move to the next section, please. Let's start with Phyllis.
Yeah, thank you. I think I'd start by saying, for instance, and I'll agree with Madam Patricia, in terms of profiling, one of the principles, like in Kenya, in the regulations, requires that there is a transparency and fairness, when you are actually profiling in the cases where a player is actually allowed to make automated decisions. And therefore, that should be actually part of your governance, ensuring that as you program your AI, that you are constantly looking at the model to ensure there is no significant biases. Coming to the issue of gender, I think the last survey that was done in Kenya, the FinAccess survey, actually showed that in terms of gender, women and men, I think, are 45-55 in terms of access to devices. And actually, one of the things that has been said in this market, if they were to conduct another survey, especially for mobile lending, for instance, women would actually, because women are better payers, women are better in terms of actually repaying loans, and maybe the bias would be against men and the youth, who most of the time don't pay the loans. So having said that, I think what this this data does is actually bring out the reality of access to credit and the different demographics and how they behave. And we've seen regulators take action to support or cushion some of the vulnerable groups. For instance, in Kenya, when it was seen that a lot of the young people who were defaulting from loans were being listed in CRBs, and therefore, being and they are being listed for very little amount, less than $10. Then what the Central Bank of Kenya did was actually to stop listing of loans below $10 US. And so, that means, you have to allow the private sector to play, to use this automated decision making as much as they can. But the regulators also have a role to play to create interventions to protect vulnerable groups. I would agree with Madam Patricia, for instance, when she was talking about ensuring that, how this is communicated, there's a video, there is something that ensures vulnerable groups are protected. Mm-hmm. But more importantly, there are interventions that regulators can actually put in place.
Mm-hmm. Thank you. Thank you so much. Yukiko?
Sure. I think that, going back to really privacy by design, and we do actually, in our framework, we look at, is this ethical use, or would this use of data result in adverse or discriminatory outcome? And I think for that, we need to look at the model, whether the model is being trained by the right data sets. Because, and I think this is going to probably link to what Awilani was saying about non-traditional data sets. Bring in the right set of data, different type of data set, and train the model. You need to constantly update the model with the right data set. And that's really, really important to make sure that the model is tuned to the right audience and does not create or reduce the risk of bias and discrimination. And I think the constant sort of improvement of that is very important. And to Rose's point, on the GDPR, there needs to be human intervention for automated decision making, not to be so sort of be legal. So I think that human intervention is also really important in the space, and then training people how to do that is really important, especially in the context of financial inclusion, because what we want to do is include more people with alternative data sources. But the data source is very important. Make sure that the model is used in the right way.
Thank you. Thank you so much. I invite Elgin to come in, but before that, I just wanted to make a note that I think there was a study conducted in Kenya and Tanzania. While on one side, it was established that women are better repayers of loan, but in terms of actual recipients of loan, there seems to be a widening gender gap, wherein more men are getting loans as digital credit as compared to women. Actually, I can share that study for interested colleagues. Actually, Elgin, can you please come in, please?
Yeah, I think as organizations that use models and AI, you can have all your safeguards in place at the start, but I think that having a monitoring is also very important. because as we know, AI is becoming it can be quite unpredictable, and the effects are may not be reliably predicted, and that's why it's important to know what's actually happening to your users.
Okay. Yeah, I mean, the review and assessment of the models is really important. Thank you so much for that point. I see that Gerard is here. Gerard, do you want to come in? Maybe provide a brief perspective of what National Bank of Rwanda is doing from a data privacy perspective, especially given the fact that digital financial services is increasing rapidly in the country. Gerard?
Okay, thank you very much. So in relation to the National Bank of Rwanda, we actually have the Financial Services Consumer Protection Law that was enacted in March this year. And among the provisions of that law, we have just a provision related to data privacy, saying that the customer's information is just private. The financial service provider should not disclose it without the permission of the customer, unless it is required by other laws. That is the main law in relation to consumer protection. So, but again, we have a regulation on protection of payment system users in terms of digital financial services. It has also a provision that is prohibiting FSPs to be able to disclose the consumer's information. We have also a general data privacy law that is still in progress. I think it will be enacted soon. That has several provisions related to data privacy across all sectors. So this is what we have in Rwanda.
Thank you, Gerard, for that brief intervention. There's a question from the floor from Momo on the time for data storage actually. So how long should the data be stored? Are there any guidelines under GDPR or any other regulations on the extent and time of data storage? Any of the panelists can come in at this point, please. Thank you.
Happy to comment on that. GDPR doesn't stipulate specific timeline for data to be purged. So it's really as long as necessary, the data should be kept and then deleted after that or anonymized after that. So it really depends on the purposes for which personal data is being processed. For financial services sector, there may be some certain data retention requirement under financial services regulation. For example, maybe the termination of bank account, and then after that, you may have to keep the record for 5 years. So I think there are different data retention schedule time, depending on the purpose. And also if you're subject to certain regulations, the regulation might stipulate a specific timeline.
Okay, thank you so much, Yukiko. And starting with you, Yukiko, I have one final question, and I request tweet size responses, less than 30 seconds from each of the panelists, given we have very limited time. So how the question is, how can public sector and private sector collaborate to jointly address the data privacy related risks, increasingly, especially within the context of increasing use of data in the delivery of financial services? Yukiko, let's start with you.
Yes, I'll be brief, and thank you very much for having me today. I think that probably the workshops together with the public sector, private sector organizations from different industries to come together and share best practices. And as Madame Patricia explained, it's really important to know how to comply with the requirements. And those know-hows can be shared from different organizations. So I think that's really key, in addition to having a robust regulatory framework and regulatory guidance.
Thank you. Thank you. Elgin, do you want to come in?
Yes, thank you for inviting me here today. I just want to repeat what Yukiko said. It's all about the how. So as organizations, who are dealing with the how every day, they have a wealth of experience, and it helps that the regulators can tap on that. Thank you.
Thank you. Phyllis, can I invite you?
Thank you so much, and thank you for inviting me as well.
You're not audible.
Can you hear me?
The voice is quite low. Maybe you can come a little closer to the mic and speak.
Okay. Sorry, is it better now?
Not yet. Maybe you can adjust your audio while I invite Ross to come in. Ross?
Okay, sure. So just quickly, I guess, to add to the previous comments, to me, ongoing consultation and coordination between regulators and industry is critically important. I've seen in some countries, industry advisory boards being set up on a semi-permanent basis to work with regulators and help guide them. And the other point I wanted to mention was the whole concept of regulatory sandboxes, innovation hubs can be a really good way for the private and public sector to engage and work on new proposals, new innovations affecting data privacy and digital financial services.
Thank you so much, Ross. Phyllis, did you manage to fix?
I don't know if it is better.
I think it's your phone is quite smart. It's already indicating that the time is up, so it's gone mute. But maybe you can quickly type your response in the chat box if that's okay. I'll invite Gerard to come in and provide his input to the question, please. Very brief response. Gerard?
Sorry, I have an issue of connection.
Yeah, this is good. We can hear you.
I did not get where the question.
So my question was, how can private sector and public sector collaborate to jointly address data privacy related risks?
Okay, thank you very much. I think it is clear now, because in Rwanda we have some consumers associations, and they have a lot of initiatives. And on the government side, again, we are the ones to be able to collaborate with them to put in place some regulations. I think bilateral meetings are very important on a regular basis, so that we can see whether there are some issues. Because in the market you have been receiving some of the complaints, but you find that the issues are mainly based on the consumers. Sometimes, if I give an example, the consumer who has been giving the PIN code, and then it happens that probably there is a certain fraud on his or her account. So I think we just partner with the private sector, and in terms of also customer awareness, so that we can, and again, when we wanted to put in place regulations or reviewing them, so it's a good partnership to be able to address that issue.
Okay, thank you so much, Gerard. Madam Patricia.
Yes. Hello. The sound was a bit patchy for me, so I couldn't hear the last question to me. So can you repeat the question, please?
Yeah, your suggestions for public-private collaboration to jointly address data privacy risks, Madam Patricia.
Oh, so my comment here is a good thing. I mean, I've been invited a few times to join in this discussion, and each time I learn more from my fellow panelists, and I think we learn together if regulators and the service deliverers and developers and everyone in the financial ecosystem join in the conversation and make their perspectives known. We learn together, and together I think we can transform the ecosystem in a very positive and effective, efficient manner. Thank you.
Thank you. And finally, Mr. Avelani, you can conclude.
Thank you very much. What I will say is ongoing engagements between the regulators and the private sector, especially using the forums and the structures that are already there. And also, echo Ross' point, make use of a regulatory sandbox because they gave a space whereby this private sector, they can come and experiment and give an opportunity for regulators to gather more data that will enable them to have more empirical evidence to respond appropriately.
Great. Thank you so much to all the panelists for those very insightful responses and discussion. Before we conclude, we have a quick evaluation. So I request my colleagues to move to the evaluation slide. I request the participants to take a couple of minutes to respond to this evaluation survey. This will help us improve the quality of the sessions, the webinars that we have in the future. Your feedback is very critical and valuable. Request you to take a minute to respond to the evaluation link. Arif has kindly shared the evaluation link in the chat box also, so you can directly link, click the link and do the evaluation. We'll wait for 30 seconds and then I'll take a minute to conclude the session, please. Another 20 seconds and then we can quickly conclude. As you continue to fill the evaluation form, let me start with a brief summary of the discussion and then conclude the webinar. But I encourage colleagues who have not done with the evaluation to continue and finish the evaluation. Thank you again to the esteemed panelists, both from the regulatory side as well as from the private sector side, on this very insightful and fruitful discussion on data privacy for digital financial services. We started the discussion on benefits and risks, and clearly benefits related to advancement of financial inclusion, reduction in the costs related to the delivery of financial services emerged as benefits. We saw how South Africa in its survey and the work that it did, there were clear linkages to financial inclusion and lowering of costs of financial services. In terms of risks, the point that Ross made, I think was the most compelling in terms of the risk of loss of control of data of consumers seems to be the biggest risk. Apart from other risks related to data breaches and so on and so forth. Now, given the obvious benefits of data, what should be the policy regulatory intervention? This was a discussion that we had, and we got very insightful suggestions. 2 points that came in clearly was the need to take a risk-based proportionate approach. A multinational company with footprints in 100 different countries with a huge balance sheet may not be subject to the same enforcement related aspects as compared to a small startup or a fintech company. It should be risk-based and proportionate. We also talked about the minimalist approach. So in many of our member countries do not have a regulation related to data privacy related framework in place. Even if it is there, it is not reflective of the current realities. In such a scenario, it is helpful to come up with a minimalist approach, which talks about doing a data privacy risk assessment at a national level, the way that South Africa did, and then based on that, coming up with consultations, coming up with minimum rules, and ensuring that there is adequate consumer awareness and recourse, and then ensuring ongoing consultations with the key stakeholders. This is the minimalist approach that we talked about, and then we went on and we talked about the private sector related interventions. So we talked about the governance mechanisms, privacy by design, and another key point that we discussed was on the cross-border data sharing. Again, there are various approaches, but I mean, not looking at it from a purely risk mitigation, risk management perspective is an approach that is advisable. And finally, the point on public-private collaboration to mitigate data privacy risks is also well taken. Aspects around industry engagement, specifically through platforms such as Regulatory Sandbox and Innovation Hubs, which is already happening. We see South Africa doing it. We've seen many countries taking this approach of inviting and collaborating with private sector players to address key solutions to advance financial inclusion. So with that as a summary of the discussion, I thank the panelists again for taking time and sharing your thoughts and perspectives. I thank the participants for sitting in and contributing to the discussion through your questions and contributions. Have a good rest of the day, dear colleagues, and for colleagues in Malaysia, have a nice evening. We will surely take the key learnings and see how we can take the topic of data privacy for digital financial services within the African region. Thank you so much, and have a good rest of the day.
Thank you. Bye.
Thank you. Thank you.
Thank you. Thank you, Gias.
Thank you very much. Thank you.
Thank you, Ras.
No
Thank
worries.
you, Gerard.
Thank you. Thank you.
Thank you,
Momo.
Thank you. Bye-bye.
Yes, how are you?
I'm good, Momo. How are you?
I'm doing
Come
fine.
on video.
Thank you. If we, how are you?
I'm fine. Thank you. And you?
Welcome. I'm all right.
Good, good, good.
Thank you. Thank you. Yeah.
Thank you, Miata Kuti.
Okay, thank you, Gias, Arif, Lita. I'm gonna end.
Bye-bye. See you.
Thank you. Thank you.
Thank you, Giselle. Merci beaucoup.
Merci beaucoup. Bom dia.
Thank you. Bye-bye.
Thank you. Bye-bye from DRC.
Bye.
Bye-bye. Thank you very much.
Thank you. Bye-bye from Angola.
Bye. Bye, Yara.
Bye. Bye, Ali. Nice to meet you.
Nice to meet you too.
Thank you. Bye-bye. See you.
Bye.
Thank you. I will just end the meeting now. Thank you.